Okay, Duck. Think Casual Friday is live and good to go.
Yep, looks like it.
Doing well, you included.
Doing all right. How are you?
I'm like, I'm all right. I'm all right. It's been a very testing period of trading my short-term strategy, which kind of just makes me wish I didn't and just, I don't know, sat in the sun and ate donuts or whatever. It's been like super frustrating. I can go into it, but I swear, I'm afraid I'll raise my voice like 10 octaves and blow off the steam that I haven't been channeling in my own trading, which is good. But I don't want to use this as a kind of rant platform. But fuck me, dude, it's been it's just been one of those trading periods, you know.
Yeah, I know the feeling. I mean, I'm sure chat and everyone that's watching wouldn't mind. Because, I mean, I feel like almost everyone is feeling the same thing, right? This range has been super choppy. And then the fact that it's resolved to the downside, for now anyway, just, I mean, I'm assuming a lot of people are getting wrecked in that kind of environment.
Yeah. I mean, I know what that feels like. So first of all, thanks for hanging out with us on Casual Friday. Hope you're keeping it casual, had a nice week, and are ready for some scam pumps/dumps over the weekend. Secondly, Blockfolio brings you Technical Roundup Monday, Wednesday, Friday, 7 UTC, as well as the newsletter every Tuesday at 8 PM UTC. That same fucking newsletter, which if I had traded for the last year, I would be mega rich and not give a fuck about any of this. But instead, I write the newsletter and then trade like shit, which is why I'm here. More, you know, in my current state. So that's fun. But that, you know, jokes aside, I don't know like about your personal predilection with this, but if I traded like Technical Roundup the newsletter to a T, or even like, I don't know, 80% of it or whatever, both the altcoins and Bitcoin and the big stuff, I would have outperformed myself by I think like orders, like, you know, multiples. I'm talking. I don't know about you, but like, Jesus, dude.
Yeah. I mean, it's the same for me. I mean, I would have mega outperformed Bitcoin, that's for sure.
Yeah.
And I mean, that's just, that's a benchmark to beat if you think about it. Up like a billion%.
Right.
And
then yeah. DeFi as well, and then like Filecoin, and I don't know, dude. It's just been such a nice ride in comparison. Also, just like on another aside, given it's Casual Friday, the structure can be a bit loose. So this guy just DMs me, and I don't know if this reminds you of anything, but he messages me saying, hi Cred, my employer has asked me to manage a 1 million crypto portfolio as I've trained him on some of the technical aspects of the ecosystems, and he trusts me now to try to beat him with my own trading strategy. I've been personally investing since 2017, but I've never before worked with this volume, and I'm feeling some pretty serious imposter syndrome. I'm trying to do my best to educate myself on best practices for managing a fund like this. Is there any evidence you would give, or is there any advice you would give, or specific topics/models for strategies that I should research? Thank you. Fuck off! Call him a cunt and give him his money back. What the fuck are you doing? You're a fucking nobody. Your boss thinks you know something about crypto. Crypto has gone up a lot, and he wants to give you $1 million to beat the market. Have you fucking seen this market in the last year? And your cunt boss thinks he can give you $1 million and you can outperform it. You're two fucking idiots. This is the dumbest thing I've ever read. This shit always fucking happens. Whenever you get dumb cunts saying the word fund, it always ends in shit. Not to mention that with this specific prick, with how in most jurisdictions the kind of collective investment scheme regulations work, if he fucks it up, he's the one who gets much harder than the idiot who gives him the money in the first place. It's fucking ridiculous. Yep. And I told him this. I'm like, yes, I have some very good advice. Managing others' money is the worst fucking thing on the planet. You're both idiots if you do it. And then, of course, he's like, oh, that's a strong response. What's your reasoning? And I'm like, listen, dickhead, if you ask me for my opinion, and I give you my opinion, and if you don't like it, it's not my obligation to give a fuck. Like, why ask me for my opinion in the first place if you're going to inherently disagree with what I've got to say? It sounds like you've already made up your mind, you know? It's just so fucking stupid. He's like, I recognize the legal situation, and like, oh, you know, he'd put 3 million into. Shut the fuck up, dude. This is the dumbest thing I've ever heard in my life. And he's like, I truly appreciate it. Gonna keep watching your videos. Some cunt wants to give you $1 million to manage to beat a market that's up 10 zillion %, and you think watching my fucking 2018 TA videos will help you? Jesus, you're all fucked. This is so dumb. This shit triggers me so fucking hard.
Yeah, that's for anyone that wants to start it, like on a serious note. I mean, you'd be the most like that's the dumbest thing that you can do. Like legitimately, every time I've heard anyone do the same thing, they've been getting wrecked so hard. And then on top of that, they get wrecked by the legal system. We've had so many of these over the years. And every time it's like some person that has no idea what they're doing. Because anyone that knows what they're doing would never even think of this shit. But it is what it is.
Yeah. It's just so fucking naive, dude. Like, I don't know. This kind of shit is just incredibly frustrating. And yeah, you mentioned at the start of the stream in terms of like the market and trading, etc. So what I want you to envisage is pick some good intraday and high time frame levels for Bitcoin and Ethereum, and then think of the most fucking agonizing trade that you could take at those high time frame levels. Then multiply that agony by 10, and you've got a fifth of the shit that I've been feeling over the last 6 trades I've taken on Bitcoin and Ethereum. Like, it's just been emotionally... Like, I wish I wasn't poor, so I didn't have to fucking trade this leverage bullshit from time to time when the opportunity comes up, and I could just ignore it and, I don't know, scam with pre-sales or do something else. But it's just been like, I would much rather... You know, it's the difference between torture and, like, being killed, right? To some extent, I would rather just take the fucking stop out for all of these trades and lose 6 in a row. Like, I would be fine with that. But of course, the market isn't kind enough to offer me that. Instead, it has to put me a bit on side, allow me to manage the trade. I fucking sit underwater for like 4 hours. It lets me out of break even. Then it moves a little bit part. Dude, it's just been such a clusterfuck on the trading side of things. So, like, I made a really good Litecoin trade. I don't know, it feels like a fucking lifetime ago. And literally within... So that's one winner. And then the 6 trades after that, 1 I've won, and then 5 have just been death by a million fucking paper cuts. So as a result, putting all of that together, I'm basically break even after aging like 10 years. It's just been a total pain in the ass. Now, I'm not just going to rant. I will provide some meaningful educational stuff. So for those of you who are aware, the way my trading, like my short-term strategy works is that like it'll very rarely put me, like I don't trade confirmation, and I trade like when the extreme of structure, right? So let's say this is a level of support. A lot of systems will say, for example, you know, you wait for the bounce, and then when the candle closes above it, that's when you enter, and then your stop is at the low, etc., etc. Now, the thing with those types of systems is, first of all, if you're short-term trading, a lot of the time, if you wait for confirmation, like the bulk of the move is usually done. Obviously, it depends what size rotation you're trading, but the more you wait for confirmation, the less of a move you've got to capture, right? As a general rule. The way my system works is I'm not the one buying, let's say it's the same support level, I'm not the one buying this close and then hoping it moons, right? My system does best, especially the short-term one, is when price is actually at the level itself, or even if it's a little bit below the level itself, and I'm anticipating the level to hold, so it stands to reason that this is the wick portion before some sort of markup. Now, the positive side of this system is obviously, if I'm right a lot more, and the risk reward becomes much more favorable in my direction. It also means, as I've learnt from the trade management point of view, I can still be less right and make money, and I can even sometimes be wrong and make money because I'm trading so close to the structure itself, right? So even if I buy this level and it, you know, closes below and like comes back, bearishly retests and dump, because my entry is like in this vicinity and usually on the level itself, it's a lot easier for me to scratch trades or get out for like 0.2, 0.5 R, break even, whatever. It's much easier for me not to take the full size loss because I'm trading at the sort of do or die structure that matters. So that's kind of what's been happening for a lot of these shorter term trades. Like I'll enter what I think is really good structure, and then it's just a bit of a grind fest, chop, whatever, barely lets me get out for like minus 0.2 R, 0.1 R, maybe just my fees, etc., etc. And then the price action just continues being shitty. So like the good news is, if I were taking like all of those 5 losses in a row, like my account would eat shit, right? 5 full-size stop outs would be really unfortunate. Instead, I happen to come out more or less break even if you take the Litecoin trade because of like a large part of my edge is the ability to manage trades even if my larger idea isn't correct. But of course the downside of all of that is it requires me to be at my PC fucking staring at this piece of shit and monitoring these intraday candle closes when I'm just trying to catch like a crumb of being on side. Not to mention, I made plans for Bitcoin, Ethereum, and Dogecoin, as in that short video. So Dogecoin idea was to long. There was a potential ETH short available in my plan as well. And then there was a Bitcoin short available in my plan as well. Now, the Dogecoin long worked out really nicely. The Bitcoin long, Bitcoin short, sorry, is on side. But of course, I didn't take any of these. I took the ETH short, which ended up being the most impossible and tricky trade of all. And I literally lost like, I don't know, $10 or something. At the end of it all. So it's just been a very kind of testing period in terms of, you know, my job is to sit there and execute my system because it works. And I can't like assume the market cares whether I'm having a good time, a bad time, setups are working, not working, whatever. I kind of just have to sit there and execute if the setup is there. And this is just one of those periods where I just take a bunch of paper cuts, and I need to kind of grind through until I land another haymaker like the Litecoin trade. But this is certainly like peak frustration in terms of agonizing price action. I'm going to mute my mic before I get any angrier or more frustrated. So why don't you say something useful?
No, I mean, that's just trading for you, right? I mean, that's one of the reasons why I've been reducing the low time frame stuff big time. And I mean, nowadays I can't even do that anymore because, I mean, of tax regulations and stuff. But I mean, for me, that's just not worth it anymore. I just don't see the point in just like losing hair over this. But then again, like depends on kind of how much you want to make out of the market, because with my attitude, you obviously don't make the most of it, right? I mean, you're going to have to lose hair if you want to make the most of it. But it's just, for me, it's always like a trade-off. Do I want to fucking stress out and suffer, or do I want to just take the obvious trades that I see that are gonna like a dime in a dozen, right? And
do I sound stressed out? What the fuck are you talking?
Like, right? If you're taking like one trade a month, right? That's and a good one. That's much more chill. But then again, like most people just don't want to chill, right? Most
and you need
people
to be super rich and experienced to be able to make like a non-trivial living out of trading once per month as well, right? Let's be straightforward about that fact as well.
Yeah, I mean, it depends, right? If you don't have to be, like, let's say you're just working on the side, you're doing your job, and then you trade once a month, you can still make a nice side income with that.
Yeah,
right?
yeah,
it's not all about the
sure.
leverage.
Yeah.
It's not all about the leverage. And I mean, in my opinion, that's like the most healthy way to trade. Yeah. But then again, I get why no one wants to do it, because we're all in crypto to make it fast, right? I mean, that's how I started out. That's how everyone started out. It's the reason why we're all in crypto, or at least most of us. Some people are like, okay, the fundamentals matter to me, but those are more the investor side of things, right?
Yeah.
Everyone else is here just to make as much money as quickly as they can. And if you're in that stage, you want to be in action all day. And I mean, you're going to have to live with the shit that gets thrown at you.
Otherwise, you go down the Peter Brandt fucking entry signal route where it's like, okay, we've got a 10-year close above 10-year resistance. Now I'm going to long and come back and manage the trade in 10 years. And then, you know, it's break even. Oh, well, time for my grandchildren to manage this position. I can't fucking see the screen anymore. But yeah, there's certainly a sort of time frame element to it all. Whew, right. Yeah. So in terms of the market more broadly, this is kind of a pretty interesting theme in terms of what does it mean in present. Also, I fucking told you we should have added Matic to Technical Roundup. This setup looked so good, and you fudded me out of it. Anyway, I was kind of thinking to myself, like, with the market right now, what does it actually mean to beat the market or outperform whatever? Typically, you'd kind of just look at Bitcoin, right? And then you'd look at your altcoin against Bitcoin, your portfolio against Bitcoin. And if you were outperforming Bitcoin, or at least matching it, you were doing something right? Or at the very least, if you weren't beating Bitcoin, then you're doing something wrong. If just holding is doing better than your trading, right? Recently, that argument has been a lot harder to make, simply because we've kind of been in an Ethereum market, right? Like ETH BTC just absolute vertical meltdown, whatever. Like if you look at the high time frames, Bitcoin's like gone nowhere over the last couple of months, whereas ETH has just been up only. So if you're being kind of, I don't know, honest or more rigorous in terms of setting a benchmark for am I beating the market or how am I performing relative to the market, it feels like, especially with this multi-week ETH BTC breakout that we talked about, it seems like ETH is the benchmark for performance. I mean, do you agree? Do you disagree? How do you view relative performance when the market looks like this?
Yeah, I mean, I agree. I mean, I've been saying that I think ETH, it makes no sense to be bearish ETH. Like, if you want to be bearish something, be bearish Bitcoin. And if you want to be bullish something, be bullish ETH. Now we're approaching the level where it starts being unreasonable, I think. Where, like, if you're expecting the flipping to happen, right, that's 2x away. And then anything way above that point gets crazy in my eyes, right? So if you're on the long side on ETH BTC, right, on a relative basis, your upside's like what? Like 2x, maybe if it flips hard, 3x, and then crypto as a whole is just gonna go tumbling, I think, because the flipping is not good for confidence in the market, in my opinion. Like most bigger players, I think, would be getting scared at that point. So the upside on that kind of trade nowadays is ×2, maybe ×3, and the downside is really, really hard to judge, right? So at some point, I think we're closing in on a point where it gets unreasonable. That said, I mean, the market's been unreasonable the entire year, basically. I mean, every market has been, so it's really hard to kind of go from it from a kind of logical standpoint. So I could still see, like, if you remember back in 2017, we had XRP flipping Bitcoin for a short amount of time.
Yeah, it's like Brad was the richest dude in the world or something.
Yeah, yeah. And if you kind of consider that, I mean, I really wouldn't be surprised if ETH flipped Bitcoin, right? I just think any kind of flipping of that sort is going to be bearish crypto as a whole. So, I mean, that's the upside target that is realistic. And then the downside, you kind of have to figure out yourself, right? Because if I'm going to say, okay, I think ETH relative to Bitcoin could go down like 50%, I think that's realistic. And then you just kind of have to make up your own mind, like how you want to be trading it. It's just like that level should be in everyone's minds, right? Whenever Bitcoin, like ETH flips Bitcoin, crazy shit is about to happen. I mean, maybe I could see Dogecoin just follow suit and flip it too. And at that point, people are just going to be terrified of this market because, I mean, who knows what else is going to happen, right? And then I think we're going to see some risk off. So for me, at this point, like I've been saying, be bearish Bitcoin, be bullish ETH. At this point, I'd say be a little bit careful on the ETH side. But then again, like I could also just see it pull a double and then the market goes completely nuts.
Yeah, I think it's something you
not
wrote
really
about
much
quite well
there
in the newsletter, trletter.com, free, 1 email per week, Tuesday, 8 p.m. UTC. You mentioned, I mean, your argument was essentially that we can be quite close to like an altcoin top in terms of time, but we could be well away from an altcoin top in terms of valuation, right? And that's the whole premise of like when markets become parabolic. It doesn't last for long, but that window is by far the craziest in terms of upside and then volatility and etc. etc. So that's certainly a dynamic to keep in mind. If you don't mind, I want to run through, I mean, there is a few things on my watch list that I'm watching and a few narratives. We're going to run through them like pretty quickly and then feel free to jump in, interrupt, interject if you agree, disagree, have something else, etc. Just trying to get our bearings. So for Bitcoin, this is like, as we've mentioned for weeks and weeks, you've got the weekly range high at like 57, 58k and resistance at 60k more broadly, and it just hasn't broken yet, right? So you have another move away from resistance at the moment. On the weekly time frame, there is like short-term or, I don't know, close by whatever technical support, wherever this is, at around 50k, but I don't really see this as like a big area of weekly structure. The two big, more significant areas of weekly structure for me are the weekly lowest close at the mid 50s, and then if things get really dicey, the pre-breakout range at 38k or like under 40k. Those are the weekly levels that matter for the time being. There is some weekly structure where the market bounced right now, but it's not like the most, I don't know, from a weekly perspective at least, not where I'd like to bet the farm. The daily time frame has pretty nice levels to work with. I mean, the market's still in the range quite clearly, but the one area that I care about for the short term is the prior daily swing low, like I said in my cringe Twitter 2-minute video, is this 51 to 52k swing point. So you have like an important, I mean, you can see you've got previous highs and lows here, level of market structure, failed breakdown that went up, and now broke below it again with that area acting as resistance. I don't want to be long into this, it just doesn't make any sense to me. I think if you get a high time frame, reclaim, close above it, whatever, there's a good chance that we retrace a lot of this scary looking dump candle. But that's counting your chickens before they hatch, lay eggs. I don't know what the fucking saying is. Basically, the nearest non-trivial obstacle for me on the daily chart is 52k, and I definitely want to see that reclaimed for Bitcoin to kind of keep up, because at least in my trading system I get really uncomfortable when the market like breaks down or gives an impulsive move on high time frames and then starts to reverse without reaching some sort of high time frame structure. Like whenever I get these bounce out of nowhere type of scenarios, and it's not purely out of nowhere as we discussed, there is some structure here, but generally speaking, if the big or good levels don't get tagged and the market starts to reverse, I generally approach that with some caution. Again, doesn't mean I can't change my mind, it just needs to break resistance, but like intuitively and generally speaking in my approach, if there's a high time frame breakdown and then the bounce starts to materialize outside or without touching a similar type of high time frame structure, I certainly get conservative. So for me, 51, 52 resistance, and we can kind of go from there on Bitcoin depending on what plays out. I don't know if you agree or disagree with that level.
No, I agree.
Whatever.
I mean, I don't think we're necessarily going to go up if we break it. But I mean, I think it's the nearest area of support anyway.
Yeah.
For me, kind of the fact that we've kind of returned to this exact point just after like a few days, I mean, you can just see how quickly that, like we bounced strongly and then returned to it like 2 weeks after, basically. Mm-hmm. It's not something you want to be seeing. So for me, this is like bearish price action, which is kind of supported by the altcoins going ballistic and Bitcoin not being able to keep up. But I mean, I'm happy to change my mind a little bit higher up, like 57, 58k. That's where I think the market really starts turning. Mm-hmm. Anything below there, I mean, I'm going to expect lower.
Yeah. I mean, it makes sense. I still have a decent like line in the sand sort of thing, which is like just under 60k for Bitcoin, this massive daily level. And that's been really good. It was really good resistance before. We had the coin listing, failed breakout, etc. And then the most recent rally, still finding resistance there. I think any type of high time frame close through 59, 60k, I know you've got like a level slightly higher up, but I think generally speaking, if you look at just how much time was spent here and where the volume was transacted, I think a high time frame close through there. At the very least, my plan, and I've said this on stream before, if I want to be bullish Bitcoin and have like long collateral exposure to Bitcoin, what I'll normally do is actually just yeet my collateral into FTT, because FTT BTC is super bullish and generally outperforms on the way down and on the way up, like for the most part. So if Bitcoin gives me that high time frame break, and I think it's going to melt faces, for the short to mid term, the rotation I actually take is not into BTC but into FTT. Just something I do personally. So yeah, that leaves us with, buying strength type of gang, at least me, 59, 60k plus, and in terms of nearer levels to market to watch before making any big decisions, 51, 52. On the ETH, go ahead.
I think in general, Bitcoin at this kind of evaluation, right? What you want to be doing is you want to be trading or like be long if the market is apish, right? So the market goes completely crazy. You want to be taking the very obvious longs. And that's been the case for a while now, where, I mean, the market's going crazy. Everyone is winning or no one is winning. So, I mean, we've been seeing this counter trade kind of thing on crypto Twitter all over the place, where it's like, everyone is bullish, so it's going to go down, or everyone is bearish, so it's going to go up. But you want to be on the side of everyone when the market is completely crazy like this. And that's why I think like 57, 58, 59 is such a good area, because I mean, that makes sense to almost everyone that we're going to go up at that point. And then I think we're going to go up if we get there. And yeah, it's just like shut the brain off kind of longs. Yeah. Those are the best ones, I think.
Good points. Now, the elephant in the room, ETH, has just been melting up. Really good looking chart. I mean, on the weekly, we're really far away from any type of high time frame structure to reference, so it's not super useful, much like Bitcoin was for much of its rally. And as we discussed, in those cases, you really have to look for daily and sometimes even intraday structures formed closer to price. And you kind of got to use what's available, right, at these high altitudes. This is something we used to like fight over all the time in Discord DMs, where I would just show you the most dog shit like so-called level ever. It was literally just like one red candle, and I'd try my best to convince you that that was support, and we'd kind of go back and forth, and sometimes it would work, sometimes it wouldn't. But I think the logic generally stands to reason that, you know, if you're so far away and the breakout has taken price so far away from where the market is now, or like from those previous ranges, whatever, you kind of have to make do with what's available. Now, I was quite annoyed because I was looking to knife catch the Ethereum dip, and it missed or didn't reach any of the daily structure that I had outlined, which sucks. So the lowest or the nearest I was willing to go to price was actually this lowest close level, just under 3,400. So basically the candle closed just before this big impulsive move. That's a retest I would be comfortable with. And then, of course, the kind of newslettery, slightly more pronounced range down here at, what is that, 33 to 3,400-ish. None of that was reached, which is kind of annoying. I could arguably employ the same logic that, like, I'm generally not comfortable getting long if the market looks like it's creating a higher time frame reversal without reaching higher time frame structure. But then again, it's very plausible that that's cope, right? Maybe my levels are shit. Maybe the buyers just, like, the ETH infinite bid is so strong it's not going to reach those levels. Like, you know, the market doesn't owe me shit in that regard. And then the only other thing I've got on intraday timeframes, we had this bearish break in market structure when this lower low was formed. And then the only other area where a lower high could make sense is basically this cluster here.
Head and shoulder.
Yeah, it's whatever, the head and shoulders level, the resistance level. The way I view it is basically it's this highest close here. And it's the same old pattern whereby we've got resistance, the attempted breakout, and then if the market comes back there, it's resistance again. Head and shoulders, over, under, whatever. I would feel comfortable. This is what I tried to sell earlier today, except I used this cluster, sold the top side of it on a fade, sat underwater for like 2 hours, and then basically got out for pocket change. So of course it's fucking going down now, right? Just makes all the sense in the world. Anyway, before I get carried away on that tangent again, in order to get long Ethereum, I think the two options which make sense to me at the very least, or stuff that I can handle, is the bearish setup failing. So like a strong close through wherever this is, high 4100s, low 4200s. At that point, there's just no resistance left. And this kind of all-time high fake out portion is unlikely to offer anything substantive. So like acceptance above the last intraday level resistance before all-time high, this generally tends to be a good long. Or if the market is generous enough to actually come back and retest those higher time frame levels, I would be more than happy to get long, as implausible as it may seem given the bid strength on this bounce. Now, yes, there was some intraday structure. I mean, even if you take like pretty conservative intraday structure in terms of what got retested, like it missed, I mean, it came close or came into some of these levels, whatever. But as we saw on the daily, at least for me, when it comes to those candle opening closes, a lot of the good higher time frame levels appear to have been front run, missed, whatever. So it's not entirely clear to me whether we're going to come back and give me the higher time frame entry that I want. If we do, I'll certainly play a short-term punt on it and think that's a decent trade. If it doesn't want to come back and the infinite bid steps into next week or whatever, just reclaim this 4100 area, the last intraday level of resistance, and I think you're kind of forced to confront bullish continuation in that case. Just one of those cases of it's at whatever resistance is left now, I want to buy above it or I want to buy support, but not this risky-ish lower high area. But broadly speaking, ETH certainly looks good, and there seems to be a bit more juice left before ETH BTC hits resistance as well. What do you think?
Yeah, I mean, in general, like whenever I have a chart like this, like you're just showing the ETH BTC chart, and I just don't want to get in front of it, right?
Yeah.
I mean, when it makes no sense. Like the thing is, like buying this is really really hard because it's so far away from support now. So I mean, I would be open to buying it. I can share my screen. Full screen. This. So this is my ETH BTC. This is my ETH BTC chart.
Yeah, nice.
And for me, basically, it's been bullish ever since this. I know it sounds stupid, right?
I mean, that's when the Bitcoin maxis held their clubhouse party, right?
Yeah, they did.
31, amazing.
Like literally. But I mean, the reason why I like this so much is because you know that everyone was bullish got wrecked there, right? Because it was very obvious that this was kind of like one of the most important supports there was, and that got undercut and then immediately engulfed, right? So whenever you see something like this, you know, like someone was slaying a trap there, and now you have a bunch of people coping on the wrong side of the market. And then on top of that, when it broke that box, I mean, that was just like that combination of things just, I mean, made sense on ETH BTC. Now, like we're running so hard that, I mean, where do you buy this, right? You could buy it here, and maybe you're gonna get that. Like if Bitcoin wipes out, I could see ETH wiping out like at least as a wick. That would be quite aggressive though, if you think about it, right? That's like a 30% pullback. It's crazy how high this has gotten. That this is a 30% pullback. But I mean, at that point, right, you know, you don't want to be buying this at these kind of levels without actually getting a pullback. I know, like, let's say this goes and does another like 50% or whatever, and then pulls back to this structure. It's still a better long, in my opinion, even though it might be a little bit higher, just because you actually know what you're doing at that stage, right? If you're buying here, I mean, where do you stop out? What do you do with the trade in general? What do you target? I don't like it. Same is true here. If this pulls back, wicks into like 0.0588 or 555, whatever, that's, in my opinion, a good trade. If not, you're just going to have to cope with having missed out, basically. And I think that's something that a lot of people have an issue with. This goes and goes, and people are just like, oh, shit. But at some point, you're going to have so.
Makes sense.
Yeah, that's my
What about the USD chart? Do you have anything there to navigate us?
I mean, like the thing is, like, if you look at this chart, right? The only thing that I can say for ETH, let's say this goes crazy, right? And then crashes like really hard and then bounces, you sell the complacency bonds. Like this is where you sell. Might be at the same level that we are right now, wherever it is, right? You want to be selling the complacency bonds. But you don't want to be selling the first rally, right? Because I mean, we've all seen it, right? People are like, this is too crazy high. I'm gonna sell it, and then they get liquidated, and then it crashes, and they're like, fuck, and then they start shorting again, like put in more money or whatever, and it does the complacency bonds, they get wiped again, and then they're out of the market, out of their trading balance, and then the true bear move starts, right? So for me, nothing really makes sense on this. Like if you're long on an investment kind of stack, you can just chill basically until you see a crash, and then you want to be getting out of the complacency bonds. If you're long in general on a trade, I mean, you're just going to have to kind of raise your invalidation up. And if you want to be getting short, I think you still want to be waiting for this complacency bonds, and that's after the crash has already happened, not before.
So as a trader, some volatility and need some structure before you come up with anything.
Yeah,
have stuff
I mean, it's at all-time high, right? You don't want to be fading that, but also you don't want to be blindly buying it like 3 times above all-time high without any kind of structure off of which you're buying, right? Unless your trading system is fine with that, because there are some that are fine with it. It's just mine isn't.
Nice. Yeah, makes sense. Nothing really. Have a 20%, which isn't massive, but it is reasonably sizable. So even if we do or don't come back to test these higher time frame levels, whatever, this consolidation, I certainly would like that. But if not, In terms of where the next bullish trade with some sort of invalidation might come, at least on a shorter time frame, it might be as simple as basically trading a daily range breakout. So if you get a move above the highest closed resistance, 4200, etc., as long as that stays as support, or the candle, you don't get a candle close below it, that's a decent continuation bet, especially if ETH BTC has juice left. Now, breakout trading, whatever, generally gets a bad rep, but in a bull market, it's not like the worst thing. And also, at the very least, you have some semblance of invalidation, whereby you know that if the candle which broke out gets engulfed, or its low gets taken, it gets invalidated in any way, you can cut your losses pretty quickly, instead of just stomaching the whole failed breakout trade low or whatever. So I'm not, at least from a whatever medium-term trading point of view, when the underlying strength is there, I'm not hugely averse to taking those breakout positions, because at the very least you have an expectation, which is price to move quickly away from it, and an invalidation, which is no closes below the level. And that's more than you'll normally get when price is up here at these heights. So I don't mind it too much.
Yeah, I think it's fair. It's just, for me, like, that's more of a low time frame thing anyway.
For sure.
And I just rather not. Someone in the chat said, just tuned in and all I hear is crash. Shorting in the bull market, this stock guy is really bad. I mean, I have to hear this all the time. Like, I literally just talked about ETH, and that, like, if you're in it, just fucking hold it, and then if it crashes, you sell then afterwards, right? That's an if, not it is gonna. Now, I think you're getting to a stage where, I mean, you're gonna have to at some point at least consider that the move against Bitcoin is getting close to an end. And like I said at the beginning of the stream, I think that's like a 2x away. That's where you really gotta be a little bit careful. But yeah.
So you're bearish. Okay, thanks. Dogecoin. Probably the only trade I should have taken today, but didn't, because that's very typical and predictable. This is one of those things where, like, the fundamentals are hilarious. Now, it's not entirely clear what Elon wants to do with this thing, right? He said he was talking to, like, the developers. What? Like, not Jackson Palmer. So is it, like, the one other dude who's active and co-founded it? Is he talking to him? Is he getting his own developers? Is he going to fork it and make it some sort of proof of stake thing? You could also easily make an argument that he simply doesn't fucking understand proof of work, right? Because Dogecoin, fork of Litecoin, which is a fork of Bitcoin. And the reason it uses less energy is because it's less secure, right? Like,
yeah,
like the network.
And useless, obviously.
Yeah, so it's like not clear to me where the fundamental argument is and where that's going to take directionally. But the good thing is it doesn't fucking matter, right? Because this thing trades really well. And we've seen with, I don't know, GME and a bunch of this other stuff, that name recognition has staying power in this market, right? And as someone Neil says in the chat, don't try to rationalize. Yeah, I agree. And, you know, the 50 IQ argument and the 150 IQ argument, which is pretty compelling, is that, you know, when you have the world's richest man with a massive cult following throwing his weight behind a coin and, like, seemingly doubling down and tripling down as well, it's probably not the best fade in the market, right? At the very least, should be open-minded towards this thing being and staying bullish, which is fine, you know, I don't care. Especially if it moves well technically, I really don't mind trading it. When it comes to Dogecoin, a few levels that I find interesting. One, nearest resistance, 58 cents or thereabouts. And then nearest support has already been tested, this breakdown and then engulf cluster at 45 to 49 cents. And actually, this is the setup in that short Twitter clip. Go back and watch it because it was published before the move played out. But from a market structure point of view, where you had high, low, lower high, lower low, and then you have a higher high, right? Normally that's suggestive of reversal, especially when you have confluence at that market structure level. This was basically the idea. This is support, this is resistance, and that move from A to B is complete, whatever. Like, generally speaking, fundamentals aside, whatever that means when talking about Dogecoin, feels very weird even saying that. Not interested in fading it. I think with a daily close through 58, 59 cents, whatever, there's a decent chance that it creeps back towards the top of the range at 65, 70, whatever. So this is daily resistance. I wouldn't buy it. If it wants to come back to daily support, fine with me. If it wants to move through daily resistance and continue towards the top of the range, also fine with me. But it seems like right now, the easier trade or the readily available trade is kind of played out. And this is where you wait for either acceptance above the range high or a pullback to support to buy. But yeah, generally speaking, high time frame, whatever. The meme doesn't seem to be going anywhere. Weekly structure is just super far away and probably not that useful. And if it is, the closest one is all the way back at like sort of 24 to 32 cents, this cluster here. The chart would start to look really rough if it were to go back there. So I think the daily time frame is like is a decent bet for both short and midterm trading this thing. And I care about 58 cents as resistance, and I care about 45 to 49 cents as support. And I really think it's that straightforward, especially when this thing trades as nicely as it does. What do you think?
Do you remember when I told you back like after 15 sats that I thought Elon had bought? Do you remember that?
Yeah.
Like
yeah,
I spammed you with like, okay, I'm pretty sure Elon bought. I honestly think he did. Like the way he's pushing it, I'm pretty sure he did. And I mean,
he's one of those big wallets.
Yeah, I think so. I would be very surprised if he isn't. And he just seems like he wants to pump his bags. I mean, he probably has enough money, but I don't know. It's just kind of a weird thing where it's like, and he wants to protect like his whatever honor, whatever that's supposed to mean, right? He just wants to like keep face.
Yeah, I mean, he's doubled down on it, right? You can't lose face by having it nuke or go to zero or whatever.
Yeah, so he went on SNL and then tried to pump it, did like so much stuff to it that I now think that he's so much in it that he doesn't want it to go back. So he's just continuously going to shill it. And who knows how high that can go, right? I mean,
$1.
I wouldn't want to. I mean, I wouldn't want to be fading it.
Yeah,
I don't really see a good reason to short. I mean, I see good reasons to sell it at some point. I mean, I'm surprised that people are even still holding it. But given that Elon's behind it, I mean, who the fuck knows, right? But yeah, I mean, he's just gonna keep on shilling it. I've read the article. Someone in the chat mentioned an article about like the background of his comment saying that the Doge team has been working with him. Mm-hmm. Like there was an article released today. I don't know if you've read it.
I'll link it in the chat. One sec, yeah. But go ahead.
Yeah, where it says that he's been kind of advising the Doge team, whatever that means, since 2019.
I will link it in the chat right now.
And I mean, if that's true, I'm like legitimately sure that he's bought a shitload of it. I mean, I'd be surprised if he didn't. Yeah, exactly that one. And if it's not true, I mean, whatever, it's crypto journalism, I wouldn't be surprised, right? Mm-hmm. But I mean, at least he's acting like he has a stake in it, which is good for an altcoin, right? It's just annoying to deal with because every time he pumps it, you see Bitcoin bid disappear. Like you have this weird thing going where they're acting a little bit inversely to each other. And yeah, he's not doing Bitcoin any favors. But then again, like the Dogecoin holders can rejoice.
So the argument I'm interested in is, do you think... this is just before you move on, it's relevant to that specific point. Do you think there's a chance that... Because so far it's his personal involvement, right? It's Elon specifically. But then it's also recently became kind of Tesla related as well, when they said they weren't going to accept Bitcoin for payments, and they're looking for greener cryptos, etc., etc. Do you think there's a chance that this then carries over to their corporate treasury strategy, where the same logic of bad for the environment, whatever, and they've made a profit anyway, where that basically also acts as a catalyst for the company now to get rid of its Bitcoin? Because like the logic isn't totally absurd, right? If he believes what he believes, why should that logic only be applicable to sales of cars and the trivial amount of Bitcoin they make and hold as a result, versus the much more non-trivial amount of Bitcoin that they have as part of their treasury strategy, right? What do you think? Am I being an idiot?
I mean, the thing is, like, Dogecoin isn't cleaner than Bitcoin is.
Of course not.
The only way he can kind of justify it is by memeing reality to like the memes, right? It's such a weird world where we have like this thing where you meme about something long enough and it becomes real, right?
Yeah.
So that's why I'm saying like the meme that like Bitcoin and crypto as a whole is like super anti-environment is a really, really damaging one,
Yeah.
right? Because I think the longer that goes on and the more people say it, the more people believe it, and then you won't be getting rid of it no matter what you say.
It sticks,
right? That's just
right?
kind of that's the environment that we're in, right? You meme something long and hard enough and it gets accepted as the truth, whether it's true or not. No one really cares.
Yeah, that's
right?
the issue, right? Like, I made a similar tweet last night where I said, you know, that there's evidence of inflation emerging in the US and maybe in other countries when these post-COVID openings start to happen. So now would be an awesome time for Bitcoin to perform really well as like an inflation hedge, which is the narrative that's been pushed since like 14K or whatever. It would be a really good, opportune time to show investors and existing holders, whatever, that, you know, in these inflation-esque scenarios, this thing can perform well. And instead, we have a Bitcoin nuke, Dogecoin stealing the Bitcoin bid, and now those advocates of Bitcoin boils ocean, environment bad, etc., as you mentioned, whether it's true or not, they've effectively got an effective spokesperson for them, your carbon footprint. You basically appeal to authority and say, well, you know, Elon Musk agrees, and that's it. You kind of win the normies over, which is a shitty place to find ourselves in.
Yeah, even more so because, I mean, the environment is a hot topic and for good reason, right? And so it's kind of like, that's the worst stigma that can get, like, besides racism, probably in today's day and age, like, that's the worst stigma that you can have, right? That's why I totally get why all of these Bitcoin maxis are speaking up so loudly, because I think a lot of them realize how bad of a look this is. The stupid thing is, like, I hate it when kind of stuff gets thrown around that isn't true, and then just everyone accepts it. But like
Donald is a perma bear.
No, I've come to terms with that. It's whatever. But like in general, like we've had so many movements start in the last few years that I'm having trouble with it. But in general, I think we could be seeing like he could be shifting even Tesla into like Doge, try to make it stick even harder. The thing is, it's not gonna stick, right? Dogecoin isn't better than Bitcoin, but he can like pump it up for quite a while, I think. So while I don't think you're gonna see like Dogecoin the next Bitcoin, whatever, I don't think that's gonna happen. But I mean, as long as Elon throws his weight behind it, it's probably not going to disappear. But I like at that point, right? At these kind of valuations, you're kind of playing with fire because everyone knows it's Dogecoin, it's a meme, and I don't think he can make it into more than that.
But if everything is a meme, then Dogecoin starts to become more credible if it's got Elon's backing, right? That's the thing. He holds this seeming like transformative power just by throwing his weight, name, and money behind stuff that you're essentially forced to take it seriously, which is my view at least. But yeah,
I wouldn't take it not seriously.
Not fading this, not looking to be bearish or whatever. I mean, it's at resistance now, but this is like short-term TA. I'm talking like longer term. One of the most notable, highest profile, legendary, whatever investor types has continuously thrown his weight behind a crypto with reasonable evidence that he owns a lot of it. In a bull market, I just think fading that is a pretty shitty decision in terms of what's available. And also, let's get this video to 200 likes. That'd be awesome. Thanks for hanging out with us this Casual Friday so far. We've still got some spicy content left. Monday, Wednesday, Friday, 7 p.m. UTC. We'd love to have you back more frequently if you're not already doing that. So other stuff on my watch list I think is reasonably interesting. The two kind of themes I want to talk about. One is the S&P kind of correlation, nuke, and then bounce. And then the second is the argument that heading into EIP 1559, basically the next rotation in crypto is going to be ETH BTC or just the ETH bid flows into DeFi and then maybe back to ETH. But basically this rising tide argument for ETH plus ETH plus DeFi is like one of those narratives that I'm watching. First of all, on the S&P 500 front, this thing nuked and then bounced really hard, right? So if we look on the daily time frame and run it back before this current rotation, I don't know why replay mode. Oh, I can't do it I haven't got the right data feed. But anyway, this looked pretty bad on the way down because it seemed to, or appeared to have broken like the entire range that it was in here. It had a daily range, a fake out to the upside, which fails, and normally you expect a move to the downside as well. And we got that, except it was very aggressive and actually closed through the range low. And this is typically pretty bearish, right? When it comes to your price pattern or range trading, one of the uglier looking things you can get is price trading in a range imbalance, attempts to break from balance to the upside. The breakout fails to get accepted. It trades back into the range, with this now being the deviation, and then actually breaks through the range low. That tends to be pretty rough and can often signal trend reversal or whatever. Not always. Sometimes you can get a fake out to the upside and a similar kind of fake out to the downside before the market continues ranging. But like in the absence of that type of reclaim, this is like one of the most bearish constructions in terms of what can happen in a range to turn the market to shit. Range, upside, no dice, downside breakdown. Like that's a piece of shit. Be very wary if that type of thing happens. And it kind of looked like it was happening in the S&P, but we also know it's an up-only coin. Devs bullish, infinite mint, all of that type of stuff. All that, whatever, that's bearish. But anyway, there's like an infinite bid on equities. If you're in doubt, just zoom out type of thing. So this recovered quite nicely. It had its big move down, and I already saw a lot of calls for it to come into these levels at under 4K, which didn't materialize. And it seems to, at least at the moment, have reclaimed more or less the bottom of the range at just over 4100s. Right now, it's still not entirely out of the woods. Because if you consider this leg to be a market structure break, this bounce could be some sort of lower high before a move lower. Like purely, I didn't trade this market, right? So this is just me pontificating on technicals based on market structure. I have no reason to think it doesn't work, but you know, just that usual disclaimer. So it's not fully out of the woods in terms of there could be some sort of lower high formed after this breakdown before more stickiness. But generally speaking, I think if you get obviously a move through the high, so like a lower low into a higher high, that's crazy bullish. Or if the market pulls back from this lower high area and finds a bid at the now deviated range low, that would also be bullish. But the reason I bring up the S&P is because we've noticed, especially when Bitcoin is like on the ropes, as it has been recently, these big S&P nukes tend to be correlated. Like Bitcoin tends to correlate with these big traditional market nukes as well. It's been one of those weird things where when Bitcoin is weak, it doesn't track the upside of the S&P, but if there's any kind of hiccup, we definitely track to the downside. So this is just one chart worth watching, I think, in the coming week, simply because when the market's dicey, the downside correlation tends to come through. Do you have a view on this market, this move, the correlation, or anything like that? I mean, do you give a shit at all?
Yeah. So I'm looking at relative strength always, because I mean the S&P is just. It's funny because every time I've talked about this, it's been at the bottom basically. So, I mean, if you look at this, right, and these are all from me, like pointing this pattern out every single time, right? Every time you get the same thing, or we've been getting the same thing. So I wouldn't be surprised if it just kind of goes back down again, retests the low, or like somewhere in here, and then goes back up again. Mm-hmm. But in general, like I don't really care too much about the S&P because crypto is my market, and I look at the relative strength, and I mean, you can kind of see how weak Bitcoin has been in comparison to the S&P, right? I mean, just look at this. This is the S&P, right? We've had the move down on both. And I mean, this is a little bit more zoomed out. We had the move down on both, basically starting from the same point. And this is Bitcoin, this is the S&P, and you can kind of see how weak it's been in comparison. The down move has been the same. The up move's been missing.
It's institutional investors buying back S&P, Dogecoin, and Ethereum instead of Bitcoin.
Yeah, it's a struggle, right? Whenever you see this, and I wouldn't make too much of it because I've seen a lot of people are just like, okay, correlation trade, whatever, and then they lean out way too far out the window, right? Saying, okay, the S&P needs to go down like a shitload, so Bitcoin has to too. That usually doesn't work, but you can kind of judge how strong or weak the market is by looking at this comparison. So that's kind of what I use it for in general. I don't trade the S&P, so for me it's really hard to judge where this is gonna go but up, because I mean, look at this. This Cred said this before. Look at the, like, zoom out and look at it. This is the S&P. And I mean, it's really, really hard to be bearish. And this even looks like it's acting, like it's gonna go actively into a parabola from here, right?
Yeah.
Which would be terrifying, what that would mean for the real world. But I mean, it's just how the chart looks. Who knows how it's gonna play out? But for me, I don't care too much besides the relative strength, and that's been missing on Bitcoin side of things. Wow, what crypto is that?
Yeah, S&P 500.
I mean, that looks like FTT.
It does look like FTT. Yeah, that's an interesting one. The other stuff, as I mentioned, I've added to my active watch list, which I've had a bit of a cleanup. I've added DeFi blue chips. If the ETH bullishness rotation type of argument is going to have any merit, I obviously expect blue chips to show that. They have so far. Even just the DeFi index relative to the rest of the market has been pretty good. I should probably add like DeFi against ETH and then DeFi against Bitcoin into this, which I'll steal from SatStart, but I'll do that later. Generally speaking, I've got my own, I've got a separate DeFi blue chips type of index, and then I've added some of them to my active watch list. So specifically Uni for the DEX narrative, Aave, because it's Aave, it's like name recognition, lending, etc. I mean, Matic, because Hasaka tweets about it. YFI, because it used to be actually the #1 DeFi blue chip that led DeFi season. Then it vastly underperformed just about everything by going sideways for ages. And now it looks like it's broken from a range. And it was one of the first ones to do so before the rest of DeFi followed through. So definitely on my radar. I've got Curve as well, Synthetics, and Comp. So those are the ones that I'm kind of monitoring, so to speak. I'll definitely go into more detail on Monday in terms of what specifically I want to see in terms of setups to get positioned, whatever, short, medium term, etc. But this is definitely something on my radar to keep track of, and to almost kind of verify or test the narrative of some sort of rotation. Like maybe we live in a world where ETH BTC hits that high time frame resistance, you get some sort of pullback or corrective price action, and then those dips, or the dip that comes about in ETH and probably the altcoin market, maybe that's where the relative strength comes out in these DeFi pairs, and that, you know, some semblance of a rotation happens. That would be plausible, but I just want to have them on my active list to keep track of stuff as ETH approaches resistance, and some of these are breaking out from high time frame ranges, etc., etc. Do you have any either altcoins or sectors that you're watching heading into next week?
I'm watching GBTC actually. I mean, I've been watching this for a long time. I mean, we've been talking about it for months now, and it's been really struggling, right? I mean, yesterday was basically a 20% discount against Bitcoin. And for the people that don't know, that just means that you can basically buy Bitcoin for 20% cheaper, but you cannot redeem it, right? So you cannot go and say, okay, I have one GBTC, I want one Bitcoin. You can't do that, at least not yet. But what you, like, it's basically representative of one Bitcoin, but you cannot redeem it, so you're just kind of stuck with it. And a lot of people, a lot of funds have been getting into crypto. Like, that was a large part of this up move. And for the people that have been around during that up move, I mean, we kept hearing about Grayscale buying, right? The entire up move, basically. And they bought and everyone was like, okay, they're just going to own the entirety of Bitcoin at some point if this keeps going on, right? Now it's kind of like the opposite. They are starting to turn into sellers, just based on the fact that it's trading at such a discount, and they still obviously get paid, right, for kind of managing that money. And the problem with like having it and why it's trading at such a discount is because you have to pay them to kind of handle your Bitcoin for you, right? So you have to pay them a fee. And given that you can't redeem your GBTC into Bitcoin, I mean, you're just going to have to pay that until you kind of cash out. And so you have a natural kind of loss, like you lose money, like you lose Bitcoin while sitting in it. And then you also have like all of these people that got into it during the run-up that have no idea what they actually, like what it is and what it's doing. And they're kind of realizing that, oh shit, we use this to bolster our books, right? So all these funds, they could buy GBTC. And given GBTC was trading above Bitcoin, that would look good on their books. And now it's the opposite, right? Now it's in drawdown. So they're like, oh shit. And they just want out. And that's why it's been kind of going down. They've been getting a lot of pain, actually. And I think that's to a large part where the weakness has come from. And there's going to be more GBTC unlocks. So there's going to be more people selling it. And then, you just get a natural kind of drawdown on Bitcoin. And I know this is sounds super complicated, and I'm not the best to explain it. So if you want to have it explained to you in a good way, you should watch our episode that we did on it, because Max Bohnen could explain it much better than I can. But basically what I'm looking for is like a big discount on GBTC so that I can buy it. That's because I think at some point you're going to see GBTC, or like in general, that entire thing turn into an ETF, and then you can redeem it. And then you basically can just take the 20% or 30% and book it as profit, right? So that's kind of like what I'm looking at the most, because I really want to get a position. I just want to have like Bitcoin bottom before I do. And I don't think Bitcoin has bottomed yet, so I'm not interested right now. And I could be wrong on that front, and then I'm missing out on a trade of a lifetime. But I'm willing to take that risk.
Someone's asking, what percentage of discount for GBTC are you looking for? Is it structural based, or is it just based on whether you think Bitcoin is strong or weak?
So I think 20% is more than good. Like 20% is insane already. But if I'm thinking that Bitcoin can go to 38K, right? And GBTC obviously would go down with it as well. And then you have like 38-ish K, that's like 20% drawdown still, right? So I would kind of give all of the stuff, all of the gain that I'm putting in, I would give that up, right? So for me, I want to be waiting until we kind of hit weekly support, or until I'm bullish on Bitcoin again, for me to buy it. But I think 20% is more than enough. But I could see it go to like 40% or 50% if people really start panicking. So
it's not just a product of the GBTC discount, it's also a product of whether you think the market looks strong or weak, right?
Yeah, okay. It's basically, I see Bitcoin at support. I'm going to be like, I'm hyper bullish Bitcoin, and I mean, that could happen at like 38K support. I'd be more than happy to buy it like 20% cheaper, right? Like if you think about it, then it's basically like buying it at like 30K, right? And that's something that I'm more than happy with. But I wouldn't want to do it right here. And like I said, that could be a mistake. I'm not entirely sure, because like I said, 20% is quite high. But people are panicking, and I think that could increase. So, I mean, I'd be happy to buy like anything beyond 20%, and then preferably at Bitcoin support, wherever that's going to be.
Willy Woo mentioned on the podcast that BTC can't really go below 41.6K. Well, that's it. Back it up, Doug.
Yeah, that's
the funny thing.
I fucking hate these.
The on-chain analysis stuff is quite funny to me, because I always seem to come across these articles when at like key inflection points in the market. Like I remember reading an article that 58K has now become like on-chain support, right? And then we nuked through it. And then a lot of people were commenting like, "Oh, what the fuck happened here?" Or they ascribe this infallibility to on-chain analysis. And, I obviously stood up for them. And I'm like, dude, it's no big deal. On-chain support became on-chain resistance, right? Which is a very tongue-in-cheek type of troll. But I think I'm not an on-chain expert. I will say two things. One, virtually unanimously, every single intelligent trader, investor that we've spoken to on Technical Roundup doesn't take on-chain analysis particularly seriously, especially when it comes to like shorter-term price projections, levels, etc. We've spoken to quantitative traders, discretionary traders, etc. We're yet to find someone who gives that method a lot of weight. And I think that's telling, right? Like one person fine, two people fine, but like literally we can't find an exception to this rule out of the very talented, esteemed, established speculators, builders, traders that we've spoken to. So that's the first point worth noting. The second one, as Dixie Enormous points out, anyone that says can't is a LARPer. Yes, Bitcoin is like the market where you have, the luxury of certainty doesn't exist. For fuck's sake, the market went to 3K and we were a few BitMEX liquidations away from going to zero, right? The idea of this can't do that, you're in the wrong arena. The issue is, on-chain analysis, by virtue of being like quantitative and using all this data that isn't straightforward, it has this like false sense of like scientific authority, and it gives people like really high conviction regarding its conclusions, where obviously all of those things are pretty antithetical to what reasonable trading, speculation, whatever is. So that's a very quick kind of aside point when it comes to these big on-chain proclamations of, outflows this, or, on-chain support that, or whales bought this entire dip. If you're using it to inform like especially your short-term trading, or to give you these ironclad ceilings and floors for price, you'll probably get fucked and you'll probably deserve it, to be honest. That's my view.
I mean, my brutally honest view on it is that everyone that I've seen defend it or like push it hard is selling that product. And I mean, I might sound like completely, I don't know, it might sound like harsh on these people, but like everyone that's pushing it hard on social media has their own chain analysis kind of premium product that they're selling for a bunch of money. So, I mean, for me, it's just really hard to take that seriously. I mean, there might be something to it, but it's kind of suspicious on that front. I could be completely off base here, and I'm not claiming anything. I'm just saying, like, that's already a no-go to me. So I don't know. I've spoken to, like you said, we've spoken to so many people. They're all selling a product. I'm just like, okay, I don't know. I don't like it. It might be something more to it. Who knows? But it's just my view on it.
I'm just going to wait for the really smart people we talk to change their mind. And to tell me that this has like a lot of alpha and it's got especially short-term edges, etc. Then it'll be like really easy for me to be like, yeah, you know what? It seems that this has now evolved or progressed to a point where it's actionable, or you're leaving chips on the table by not paying attention, etc. I just don't think we're there yet, to be honest. And most of the
maybe we are the apes, and we just don't know. I mean, could be.
We and all of the guests we've spoken to on Technical Roundup, we're all idiots. That's kind of that. Duck, any final notes? I feel like we've covered a lot of ground. I had to raise the temperature a little bit at the start of the stream, but I think we caught wind and whatever, calmed down a little bit towards the end, and said some useful stuff.
I think the viewers appreciate knowing that they're not alone in this, because, like I said, I think everyone goes through it. Everyone has to deal with like shitty trades. The more often you trade, the more you have to deal with it. It's just how it is.
Charge it to the game, eh?
Yep. But no, I think like the one thing to watch, like the best thing to watch right now, and Loomdot's a really good guy to kind of follow on this, is the GPDC stuff. I think there's a lot of alpha in there right now, just based on the fact that there's a lot of unlocks happening in the next few days, 2 weeks, 2 months. Like the next 2 months especially. And then, I mean, while you see Bitcoin chilling like this, I mean, there's better opportunity in the altcoins. And And especially I would say don't try to kind of fade all of this altcoin action, because you're almost always better off being on the bullish side on the altcoins, even though most of us agree that they're probably gonna go down again. It's just trading altcoins on the bullish side is much easier than on the bearish side. And if you're bearish on it, best to just stay out and just not touch it, in my opinion anyway.
So you're not all in Shiba?
Nope.
Is that what you're saying? Why do you hate money?
That's such a funny story, dude. I wonder how that's gonna play out. No idea. How is that doing anyway? Have you checked on it? On Poloniex, it has a lot of history. Actually.
On Polo, okay. Polo.
Yeah. Oh, it's bounced really nicely from support.
SHIB.
I mean,
yeah,
whoever's buying this
reminds me of GME Daily to some extent, because there was a similar type of. The only reason I know what this reminds me of GME to some extent is because my sister FOMO'd into GME and she bought like with leverage because she didn't fully understand. Like she thought she was buying spot, but she was buying futures, so she got like liquidated in 5 minutes, which is fun. But then she had like a tiny bit left of like spot or like some fraction of the position that wasn't liquidated, and it basically arrived at GME support, which looked a bit like this. Basically the consolidation before the big sort of move up. So let me actually see if I can find it just for my own interest on GME where that similar structure came about. I think yeah it was here. I remember it like it was yesterday. It was here, this type of level. So maybe, you know, the bullish case for SHIB, which sounds terrible, the bullish case for SHIB is kind of GME 2.0. You have a big sort of blow-offy move up, retraces to the cluster preceding it, and then that's where you get your bounce potentially into a lower high. I mean, structurally, I don't know about you, Duck, it's pretty hard to disagree at the very least that there is some support wherever this is. You know?
Yeah, I actually talked about it during my nuke stream. Like I literally have the same thing on there.
Well, there you go.
But I mean, anything like that, if you're looking for anything more than a complacency bounce, I think you're crazy. But then you can, crazy has been the name of the game. So maybe you gotta be a little bit crazy. But for me, it's just like, this is the complacency bounce that you're looking, like a little bit further up probably, but I think that's the complacency bounce that you want to be selling, but I could be entirely wrong. I'm glad I don't have to trade this because it's way over my head, or way, I don't know what you would want to call it. Like I would have to bang my head against the wall like 10 times to be able to compete.
You know what I was thinking?
Kind of
I kind of want to do a podcast interview. We bring on like an actual psychologist or psychiatrist or someone, and we ask them for like, what does the literature say about lowering your IQ? Like, what are some things you can do to actually become more dumb? And then do a podcast episode with that person to work.
Biggest alpha you could ever get.
Wouldn't that be great? Like, I don't know what kind of absence of ethics they'd need to have to come on our show and speak to that. But I'm sure we could find someone dodgy enough willing to tell us how to become stupid. I think that'd be a really fun podcast episode. Or maybe not. I'm sure the chat could give some instant feedback on that terrible, unethical idea. But yeah, that's kind of all I've got for, and all we've got, I think, for Casual Friday. Thank you to Blockfolio for sponsoring Technical Roundup. Spot trading, asset swaps, KYC takes 2 minutes. No fees. It's the only ethical way to shill crypto to your family. Very nice UI UX experience, adding all sorts of fiat on-ramps and off-ramps. And it's something I use and we use, so be sure to check them out to support us, and because it's probably the best solution for crypto spot trading. So thank you to Blockfolio. Duck, thanks for hanging out. And for the rest of you, make sure to like the video if you haven't already. That will be awesome. And I will see you on Monday for Monday Markets for some more detailed breakdowns of this stuff. That's all from us. Take care, have a nice weekend, and see you next week. Peace.